Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, let's try to create the trading plan for the coming week on the euro currency. Let's see, price action is a bit intriguing here. Well, and if you remember our discussion on Friday, we said that since market has shown the significant bounce up right here, then it's better to wait a bit to see how market will respond again to this cluster resistance. So we can see 50% resistance with this thrust and the natural support resistance with this low 129.50 area, approximately this range. Okay, and we said that probably market could form here with a stop grabber pattern, but unfortunately, at least by the book approach, we do not have the stop grabber, since market has closed 3 pips higher than the MACD predictor line, at least by the Alperi UK data. Maybe on your charts you will get the stop grabber, but despite of this, I still gravitate to treat this action as the stop grabber. I'd not offer you to trade it as the stop grabber and treat it purely as the pattern, but the overall price action and what in a bit later you will see what we have on the lower time frame makes me think that we still have some sort of the if you would call it a stop grabber by nature, not by the absolutely theoretical point of view. Besides, if you'll take a look at the daily gold market, you'll see that here we have the daily stop grabber, and since in the recent couple of weeks all US dollar related assets mostly are driven by the US dollar but not by themselves, mostly because major events have happened with the particular with the United States dollar and the economy of the United States, then you'll see that price action on the gold market and on the euro currency and many other assets very similar. That's why in general I think that bearish context here is still intact, and at least in the beginning of the week I probably would like to take the bet on the downward action. Speaking about the invalidation point of the bearish setup, I think that this level is 130. Because if market will return right back above this area, it will erase all bearish patterns that we have now. You'll see a bit later what I'm speaking about. And it will return right back in this consolidation. If and when market returns in some consolidation from the broken line, it usually has the tendency to continue move right to the opposite border of this consolidation. So in this case, I will not be surprised if market will pass through this 130. I will not be surprised if market will proceed higher to the 132 area approximately. So from that standpoint, that high is our invalidation point for the beginning of the week and for our short-term bearish context is 130 area. If market will start to behave as we suggest and will continue move down, then that is our next target. Short-term target is 127.50 area, because that is 618 extension of that ABCD pattern. That is the minor target of the stop grabber on the weekly time frame, and that is also the target of another pattern that you will see on the 4-hour time frame. Here it is. Here we have the butterfly buy pattern that now is developing on the 4-hour time frame. We have discussed it on Friday as well. What we see here, first of all, just move it a bit to the right. Okay, first of all, take a look how market has failed twice right at this resistance area. The first spike at the Fed Reserve meeting. That's the second was yesterday. Market has formed perfect bearish engulfing, and in some term we could even call it as the rejection of price, some kind of the railroad track when the market has failed right in this area. So the second time move to the downside. By this high, market holds this butterfly intact. That's why this level makes for us absolutely special, meaning since if market will pass through our invalidation point above 130, it will erase this butterfly and will open the door for a bullish context and short-term bullish context. That's why 130 level is very significant for us. Now if this butterfly will hold, then can see 127 extension stands precisely at the same area. So will be the minor targets 127.50. But I suggest that if market will reach this level, it hardly will leave intact these lows. And since that is the significant low and a lot of stops have been placed below it, the market will trigger the stops, it will get the additional acceleration. So probably we should be focused mostly on the 1618 extension if market will start to work. 1618 stands approximately around 126.75. This area will be probably the target of this pattern. Well, that's what is concerning the 4-hour time frame. What we have on the hourly time frame? On the hourly time frame, take a look. That is our butterfly that we have discussed yesterday. So yesterday we said that probably market could show another splash up. That's 1618 extension, this butterfly. And now take a look. Market is forming the reversal pattern. That is the head and shoulders. Also, since the 129.75, 129.80 are significant resistance, look, it is accompanied by bearish divergence with the MACD indicator, and that divergence is the one that could be taken into consideration, since it appears at significant resistance and accompanied by the reversal pattern. And take a look, butterflies very often becomes the part of the head and shoulders. That's very often happens on different markets. Now, following to this pattern, we probably should wait for some bounce to the upside to keep the harmony of these patterns. This area is approximately 129.50, 129.61, the 618 resistance of this most recent swing down. That is an area where we should watch for opportunity to enter short with the stops again these highs, because if market will continue move high, taking out of these highs, it will erase this pattern, it will erase 4-hour butterfly buy, and it will simultaneously break the resistance level on the daily time frame, and by this action it will return right back in the consolidation on the daily time frame. So other words speaking, if market will pass through this area, it will totally destroy the short-term bearish context. That's why this is our invalidation point. So you can see the risk is just the 40 pips approximately. Reward is absolutely tremendous, so we will get absolutely perfect trade from this standpoint. You can see about 200 or even more pips to the downside, if this will be really the case and market will start behave as we expect. So that is our trading plan for the coming week. Of course, all of us know that anything could happen. The market could erase even such obvious and strong patterns that now are forming on the EUR currency, but currently I do not see any reasons to take the long position, because I do not see any context for that, any patterns that could point to the further upward continuation, because for that, as I said, I need to see the market pass through the 130. Before that, I will not think about entering on the long side of the market. Well, that's our current view on the market. Let's see how it will turn, and keep closely on this area, because that will be our trigger and starting point for trading on the next week. The last moment that's here is important. Take a look. The weekly pivot point on the coming week stands precisely at the neckline. So if market will pass through it with this head and shoulders pattern, we will simultaneously get the confirmation as from the sentiment that it will turn to the bullish, as from the technical point that market will trigger this head and shoulders pattern. So our confidence will increase if market will pass through this 129.70 area right in the beginning of the week. So the coming week probably will be very interesting. If you will read our analysis of the high time frame, so on the monthly time frame especially, you will see that the overall price action now on the EUR currency is rather intriguing, and depending on how market will behave in the nearest months around 129.50 area on the monthly time frame, this will in fact will determine the overall price action till the next of the year, since market now stands at some long-term edge, because if market will proceed lower to the 127.50 and lower, it will open really significant targets right below the market, and this could lead to really extended moves to the downside on the EUR currency. That's why this current situation on the EUR currency is very interesting.